Every startup begins with an idea, but turning that idea into a thriving business requires right mentorship, resources, and of course, funding. As Bradfeld had said, incubators don't just fund ideas, they build foundations for lasting success. In our current session, we will explore how incubators bridge the gap between innovation and investment. And to lead this session, we have a seasoned industry expert who has background both in leadership as well as entrepreneurship. His academic credentials from IIT Madras and IIM Ahmedabad are also testament to his expertise and strategic thinking. With his role in NSRCEL, he is fully committed to fostering entrepreneurial capabilities and bridging the gap between investments and innovation to enable large scale impact. We welcome Anand Sri Ganesh to host our next session.
Thank you. Thank you for having me. 150 finance professionals in the room or thereabouts. In my postgrad days, I passed my finance courses with the skin of my teeth, just about scraped through. And imagine so many years later, I'm talking to a bunch of finance professionals. I need to tell my profs. Karma is a funny thing. What I will try to do, from what I gather, you've had a conversation since morning around the broader investment ecosystem and a little bit about the impact ecosystem. I'll try and give you maybe a 20-25 minute perspective from the enabler ecosystem, which is what people like us do to enable entrepreneurs, to enable innovation to get injected into our ecosystem, and for that innovation to find meaningful commercial financial structures, pragmatic financial models, something that might interest a lot of you, and some paths to meaningful scale and sustenance. While the tone is not necessarily impact in nature, the work we do as an incubator is fundamentally to inject commercially scalable entrepreneurial energy into our economic ecosystem. There is a portion to impact that we work with. So I'll try and give a flavor of that over the next maybe 20-25 minutes or so. And after that, if you guys have any thoughts, comments, questions, violent disagreements, we'll pick them up. Quick 10 seconds to whom I represent. My name is Ganesh. I'm the CEO of NSRCEL. NSRCEL is the NS Raghavan Center for Entrepreneurial Learning. We are IIM Bangalore's Center for Entrepreneurship and Startup Hub. And if our purpose as an incubator, and we are classically what might call an academic business incubator housed within an academic institution, an open incubator in the sense we work with entrepreneurs across the country. Quite literally, as we speak today, my founders are in 82 towns across the country. And we are a business incubator in the sense we focus dominantly on enabling the entrepreneurial dimensions and the venture business dimensions of the innovator that we work with. There are two other clusters. There is science and technology that needs to get embedded. There is, of course, risk capital that needs to get embedded. And we try to bring in a large partner ecosystem to complement the work we do. That's the broad reason for our existence. Beyond that, I won't do a sales pitch right now, but I will do a sales pitch a little later. We are a not-for-profit. Abhi aapko becha nahi, to my team will be very upset. You probably know this, but I want to set some context. It is popular belief that we are the third largest entrepreneurial ecosystem globally. In the sense of numbers, right? The largest number of entrepreneurs that enter the ecosystem since 2016-17 when the Startup India policy was tabled. Imagine that as some kind of an important milestone, a benchmark to us. And maybe until end of December, about 177,000 entrepreneurs have been recognized by DPIIT. We are among the fifth or sixth largest investment ecosystem globally. If you look at the US, China, add UK, Israel, maybe Singapore, and we are probably on the top 5-6 in terms of just the number of active early stage risk capital investors that operate in the ecosystem. And all of that taken together, we are a fairly large entrepreneurial ecosystem. And as a friend and colleague of mine says, we've cracked the quantity revolution. We've cracked the volume at the pyramid, which is also to say that we are a meaningful player in the larger innovation ecosystem in the country. And I gather you had an IPO conversation a couple of hours back. We are probably one of the largest SaaS ecosystems globally. And that's one example of entrepreneurs from India looking at India for India as innovation and India for the world as innovation and playing a meaningful role in the product markets that they work in, which means as an entrepreneurial ecosystem, we are a reasonably strong influencer in the global economy as well. And a large part of that, by the way, the overhang I'd like you to have when I say third largest ecosystem and sixth or seventh largest investment ecosystem globally is also that in the nicest manner, we're a 2,500 per capita country. In the sense, the broader economic momentum is extremely diverse and fragmented. And you probably know the India 1, India 2, India 3, India 7 story. There is a strong top of the pyramid, which is a large economic influencer. And there is a significantly large middle of the pyramid, which is still a lower middle income world, if one may. And the reason one recognizes that as a paradigm is also because to mobilize an innovation ecosystem with that kind of a fragmented environment is not easy to accomplish. Having said that, we've made reasonable progress. And one example, this is from our director, Professor Rishi, and I've shamelessly stolen his slide. Aisa karna chahiye. Only if you're a faculty, you can't do plagiarism. If you're my part of the world, it's allowed. If, for example, look at the defense, aerospace, drone tech, avionics ecosystem. That ecosystem has evolved probably over the last 30, 40 years. Today, over the last 3 or 4 years, we are talking of indigenous drones, elimination of rare earths, large-scale, mid-payload propulsion systems, EV, unaided takeoff and landing. And that's the flavor of, let's say, the last 12, 18, 24 months. That ecosystem has evolved over 30 years of consistent innovation ecosystem, a lot of fundamental R&D, a lot of fundamental invention that has gone into the defense, avionics, aerospace system. And in some form, today we are seeing the sort of flowering of that. And we've got to recognize that in some of these domains, we've played a long game as a country. And as an incubator, a large part of our onus also is trying to unearth this. Is if where there is such momentum, where there are nuggets of innovation that have a rapid commercialization potential, can we find, can we identify, and then can we enable the scale that hopefully some of you VCs might benefit from? You guys don't thank us by the way. In all of this, and I talked about the ecosystem, you may have come across the GEM report, the Global Entrepreneurship Monitor report. It is fairly charitable to our ecosystem. Much as we complain about the Bangalore, it did take me an hour and 45 minutes to get from Bangalore Road to here. Having said all of that, if you look at the dominant contributors to what might call an entrepreneurial and innovation ecosystem, at least among our peers, we perform reasonably well. Funnily, including elements like ease of doing business, especially relatively speaking. We need to keep our bar high, and it's worth debating. It's worth putting ourselves under pressure on elements of those like that. But having said that, among our peers, for a young entrepreneur, for a young innovator, the ease of doing business among our peers is, funnily enough, fairly interesting. The ability to mobilize resources, the ability to mobilize knowledge systems, which is understand market forces, understand policy, understand go-to-market business models, understand policy imperatives, the knowledge networks that can enable an entrepreneur in the country are reasonably well penetrated and well available. All of this taken together gives us, I'd like to believe, a solid foundation. You probably know this, and I'll breeze through this. We are a fairly heavyweight, relatively speaking, in the risk capital ecosystem globally. Of course, we've gone through our, I'd like to say, rationalization over the last 18, 24 months. From this side of the table, I want to believe that's a good thing, that there is sanity in injection of risk capital. I'm not sure my founder, friends, and colleagues might agree with me, but I would like to believe as an incubator, as an enabler to the ecosystem, that sense of financial pragmatism, I think, is healthy from a medium long term window. We could play a longer game if we had that lens. All of this, by the way, looks hunky dory, like, looks like nice honeymoon. So I want to deconstruct some of that. I've used the word innovation multiple times in the last 5-7 minutes, which is, if I had to look at classical definitions, fundamental science and research, fundamental technology innovation that is able to meaningfully solve for localized economic problems at meaningful scale. Reasonable English mumbo jumbo definition of innovation. On that paradigm, on that metric, we are relatively low among our peers. A large part of, I mean this respectfully, if my choice of words are wrong, we can blame it on the long drive and traffic and so on. That a large part of the entrepreneurial innovation, and I say large part, it's a broad brush, it might be unfair, that injection is somewhat derivative. The technologies, the fundamental sciences, the business models, the operating models are somewhat derivative in nature. I'm not saying that is a bad thing. That is the nature of entrepreneurship. You find opportunities and you attempt to capitalize on opportunities rapidly without over-intellectualizing, which is the job of an entrepreneur. But if you have to step back and aggregate and look at all of them taken together and go back and say, hey, we're a 2,500 per capita income country, and all of this 7-8 years of entrepreneurial energy, how much of the needle has it moved? We've got to look at this a little less charitably. The quantum of innovation that has made meaningful difference to problem sets and opportunity sets, which are India specific, are relatively lower. Some of these examples are stark, which you probably know. If you imagine, easy examples are in the space of healthcare. We are, interestingly, the diabetes capital of the world. 40 million people who ail in type 1 or type 2 diabetes across the country. At least between 4 to 5 million of them require an insulin infusion or injection once a day. A single vial of insulin costs between $6 to $9 depending on type, quality, brand, and so on. I'm not a biochemist. I don't know jack about insulin. But just very, very theoretically and academically, if one could imagine that one could make and retail a vial of insulin at $1, this is $1 billion per year revenue opportunity. So there are large problem sets which have large commercial potential, which require us in some form to create that twist in innovation that, of course, is meaningfully impactful to what I say as our per capita income and our human development index and all those nice things, but also create all those unicorns and sweet corns that you guys like that have significant scale and commercial potential. I think that India for India story, I'd like to believe, requires work. What are we attempting to do in all of this? And this is a funny story. The role of an incubator broadly is twofold. Apologies if there is jargon in the middle. It just might be bad habit. TRL stands for Technology Readiness Life Cycle, which is from an R&D to a lab, to a prototype, to engineering, to production, and you try to put some gates into that, and it's called Technology Readiness Life Cycle. Similarly, there are business readiness life cycles. Idea, pre-prototype, prototype, customer ready, customer proven, market ready, scale, so on and so forth. So reasonably commonsensical. The role of an incubator is twofold. The first is the science and technology incubator that allows the innovator to even have a right to play in the party, which means, is the technology available? Is it viable? Does it reasonably work? Does it have reasonable interoperability among the systems that it has to work with? If you guys are, for example, might be familiar with the fintech space, understanding secure APIs, data transfer, so on and so forth, means it is reasonably interoperable within a set of systems ecosystems. Technology readiness allows that game to get played, which means is the innovator having a product or an innovation that now earns the right to play in his or her choice of markets. The business readiness life cycle then takes that and say the person has the right to play. Will the market allow space for that innovation to play in a meaningfully sustainable and scaled manner? The role of incubation is this. I put lot of bullets because when I do fundraising, it looks like we are very busy. Why this pinches, interestingly, is IIM Bangalore along with IIT Madras did a research of the incubation ecosystem in the country. It's called the Kaleidoscope. You'll find it on the NSRCEL website or on Google. Out of 177,000 ventures that DPIIT registered or recognized since 2017, 8.2% of startups were incubated by the incubation ecosystem. As of October end, there are 1,107 incubators in the country. Today, every engineering college, I'm not saying has an incubator, is also encouraged to have an incubator because of the NACS rankings, the NIRF rankings, the infusion of government money into setting up incubation, Startup India, Atal Innovation, Department of Science and Technology, Bioinformation, BIRAC, Ministry of Electronics. There are about 14 different ministries and at least 22 state startup missions that are encouraging the incubator volume problem. Having said all of that, 8.2% of all entrepreneurs get incubated. So somewhere these numbers don't make too much sense to me as well. That requires a deconstruct. What does the space look like from where I stand? Three kinds of incubators that you will look at. The one bunch is the academic incubators, technical and business. Business are people like us, technical are IIT Madras, IIT Delhi, ISC down the road, so RV, PES, so on and so forth. There are a whole set of independent academic incubators and independent corporate incubators and accelerators and independent not-for-profit incubators. So people like TIE, NASCOM, Wilgrow does a brilliant job in the impact space, Stanford Seed, Stanford Spark, a whole set of corporate accelerators, the NetApp Accelerator, the Shell's Accelerator, E4 Labs, Amazon Startup, Google for Startups. There are about at least 150, 200 corporates that have in some form an accelerator that attempts to encourage entrepreneurial ecosystem, but more also interestingly figure if can that ecosystem in some form encourage, promote, grow, scale our own corporate business infrastructure. That is how our ecosystem looks like. So the 1,107 somewhere fit into one of these three bubbles. The reason I put them as overlapping Venn diagrams is also to pretend I understand maths, is because the synergies are very critical. For a business incubator to work with a technical incubator and work with a corporate accelerator is very critical to achieve go-to-market, is very critical to understand policy that might help design a meaningful product market fit, and so on. Having said that, we are very tier 1 centric. Again, in my humble opinion, nothing wrong with that. The only challenge is the diversity of the country. At 29 states and 9 union territories, the diversity of the country is very large. When I started off by saying we operate in 82 towns, I mean that with fact, it is not fake news. I have 2 ventures in Kargil. Great pride of mine. Ventures working in STEM education and financial and digital literacy in the Dras sector of Kargil. The reason I say this, and this is goose pimply truly in nature, is that kind of innovation knows no home. Right? An innovator exists anywhere in the country, and we need to find safe spaces for such innovators to crystallize their thinking, crystallize their business models, crystallize their entrepreneurial mindset, and who knows, create the next Zogo, the next Freshworks of the country. Having said all of that, the incubation ecosystem is dominantly tier 1 centric. There is significant entrepreneur migration from tier 2, tier 3 to tier 1, especially in the first 2-3 years of their journey. If the entrepreneur figures this product is working, there is a meaningful price point I can acquire, there is a meaningful customer, it does make a lot of common sense for that innovator sitting in Agartala or Guwahati to quickly migrate to NCR, Mumbai or Bangalore, simply because the ecosystem has organic momentum to it. That does happen. It happens fairly strongly, but it doesn't happen all the time. And there is some policy and ecosystem ownership to provide for the complement, where logical economic migration is not or cannot happen, yet the innovator can do brilliant work. We have to find a way to do that. Some of you, yeah, everybody in the room is finance professional, right? So you might be aware of Gym Books. Gym Books, one of the fastest growing compliance finance software for small and medium businesses and retailers, is headquartered out of Raichur. Freaky cool innovator. He's still headquartered in Raichur. Is still one of the fastest growing SMB finance software after Tally and Khata Books and so on. Which means there is significant nation scale potential that we have to find a way to tap into. Here is where I will do about 3 minutes of selling. That thing says 7.5 minutes. How are we attempting to do this? By the way, the reason I'm selling is I'm a not-for-profit, and I said this earlier, I should be selling. It is my job. I have no shame in doing so. Some of you who are in large corporates or are ultra HNIs, please meet me for coffee. I'm a not-for-profit. I can't feel shame. What do we do as a business incubator housed within IIM Bangalore? There are 3 broad levers for us. The first is reach. Can we reach and innovate? A brilliant scientist in ISC or a brilliant innovator in Kargil equally require incubation ecosystem to crystallize their business model, their entrepreneurial mindset, their organizational capability. Can we provide that safe space? The second, there are significant clusters in the country. Things like enterprise SaaS, because I spoke about it earlier, consumer tech, internet, mobile tech, platform business models, reasonably well-evolved, well-mature ecosystems. As in, knowledge networks are strong, corporate networks are strong, awareness and acceptance of business models are strong, policy is reasonably well-evolved, availability and access to finance is reasonably available, which means the job of the innovator is to navigate a reasonably well-evolved market structure. There are many clusters, this is not the case. Think climate. I gave an example of healthcare. Think gender lens to entrepreneurship. DPIIT claims 44% women entrepreneurship penetration. Our research says it's 18%. I don't know where the truth lies. The point is not to debate the truth, but the point is to believe that half the innovation capital in the country is not even coming to the entrepreneurial party, which means we will always remain a Garib country. Such clusters are deeply underserved ecosystems. We want to see if we can play a role in convening partners, right kind of investors, right kind of institutions, maybe influence government policy to see if we can accelerate such underserved clusters which have significant economic potential or societal impact down the road. So you're playing a slightly long game. You play the climate game 3 to 5 years. Who knows? We might create reasonably indigenous technology for not just our security and national priorities, but also simply because our planet deserves it. The third cluster is NSRCEL has been lucky, thanks to Mr. N.S. Raghavan's vision 25 years ago. We've had 25 years of learning. We've had 25 years at least of making mistakes, what not to do in the ecosystem. What you attempt to do is try to crystallize this, try to productize that in some form. And we want to see if we can go out to younger incubators. If there is an IIM Kashipur, if there is an NIT Agartala, can we help? They are 2-3-year-old incubators. Can we, with our knowledge, help scale them up more rapidly? Can they reach the stage that it took us 25 years to get to where we are? If God is kind, can we get them there in 3 to 4 years? Which means that multiplier effect could have significant impact on injecting the entrepreneur energy I talk about within less than a generation time frame. Which means, can we crack this void problem where we've cracked the quantity revolution? We've got to crack the quantity revolution. Can we do that in our lifetime? Before we get hit by a truck tonight, very morbid, can we create that collective energy and momentum that can solve for this at nation scale? So we are attempting to do that. And I would say attempting in the nicest manner. In all of that, this is meant for showing off all of you. Some of you would like to be donors and funders. This is the show-off slide. We'd like to believe we are somewhat decent in the ecosystem. In all of this, the role of risk capital. After 2 minutes, I'll stop. The fundamental role of risk capital is the capital word. Right? You need to find opportunities that are commercially viable and deliver the multiples that you hope for it to deliver. It is risk because God has to be kind. And the game is not so linear. Right? There are multiple stages, there are multiple choice points, there are multiple points of inflection, pivot, risk. You know this. I'm basically telling you what you guys do, or many of you probably do. There are multiple inflection points. Our role as an incubator is to evangelize, motivate, encourage you to look at all of those opportunities of those inflection points of risk as great opportunities to create multiples. But I, in the nicest manner, also believe that you do have a huge role to play in creating that multiplier impact. Right? If in some, I don't know how, I'm thankfully not a financial professional. Every month my team gives me that tax and GST Excel sheet. I still haven't understood a word of what that sheet says. I see that last corner Excel cell. I look at that number, my blood pressure goes up 100, then it comes down. That's my finest knowledge of finance, as it were. My only premise to you is there is opportunity to unearth risk capital that sometimes is not able to see the potential. In your role, because you look at capital markets, you look at private markets, you look at entrepreneurial opportunities at global paradigm and in the India context, there are times when you have a perspective that some of our innovators and entrepreneurs may not have. You have a broader perspective. You see a large number of companies. You have visibility and wisdom to multiple business models, multiple financial structures. Many of them have great potential to scale if they find the right footing, the right pivot, the right traction. Sometimes the ownership of risk capital, and I say this in an uninvited manner, is also to be that mentor and the guide. And I think that opportunity is powerful. I do know, I don't want to say a large number, but a fairly serious number of the VC community, especially people that I work with closely, take this very seriously, which is one of their roles, in addition to injecting risk capital, is also to bring in and provide a perspective and a network ecosystem that the founder entrepreneur simply otherwise may not have access to or may not have the world vision for. That's the whole point of him being an entrepreneur. He's looked at an opportunity in a somewhat blinkered manner. Can we expand that vision footprint? Having said that, you guys know this, less than 15% of ventures are reasonably investable in their business model, especially in the early stages. We try very hard to look at alternative sources of capital injection. In some areas, this is extremely tough, right? Hardware-centric business models, climate tech, which is non-software-centric, health tech, medical devices, drug diagnostic, drug delivery, which is not software-driven, are tough sectors or clusters to raise early stage risk capital. And I'm saying that is the nature of that market, right? I'm not saying risk capital should be charitable. What I'm trying to say is there is also an opportunity to find other sources of capital to inject in to create that risk bridge, which need not necessarily be equity in nature. It still could be some pivot, some Rubik's Cube of a private market construct. So I know there was a conversation on venture debt earlier. We look significantly for government grants, corporate challenges, corporate innovation ecosystems. Funnily, where unit economics are reasonably nice. Interestingly, in a few hardware businesses, areas like sustainability, waste to value, debt works. Debt works, interestingly, also in favor of the founder because you don't need early dilution. You can hold back the equity when you are in a larger growth stage. And if you can crack unit economics, crack a story which is not asset light, and create early revenue traction, you're holding back equity for faster growth later. You're also just creating a stronger business model in the early stages. In one extreme case, we've done crowdfunding as well. It works. I'm not saying it will work all the while, but every once in a while you do. बोलते हैं ना हाथ पैर मारो कुछ हो जाएगा. Sometimes you do funny things and sometimes it works. Revenue-based financing, bill discounting, alternative sources of capital, in many cases work. So we try very hard to create capital infusion where private market equity-led capital is still reluctant. And I think it's important for us to recognize that. It says time up, and I'll give one funny example and I'll stop. This is an impact venture. It was not my objective to pick an impact example. It would not have resonated, but more to tell the story. It's an illustrative story. It's an organization called Farmers for Forests. In any other domain, you would consider it a deep tech venture. They are a significant IoT and low altitude drone tech company. Funnily, the real work they do is in agroforestry. So they work in arid and semi-arid regions. They started in Gadchiroli, Vidarbha. Today they operate in 4 states across the country, where they attempt to claim deforested land on behalf of the farmers, afforested based on the specific ecological cluster or pattern of that geography, give that land back to the farmer and help the farmer with the right harvesting. Largely, this is cash crop. The right harvesting for that ecology. They track the afforested footprint through drone and IoT. They sequester the carbon, trade the carbon in global carbon markets, take that revenue, inject back to the farmer. I can't describe what this company is. Is this an agri-tech company? Is this an impact company? Is this a drone IoT company? I don't know. But if you took this company to any early mid-stage investor and say, boss, let's raise a Series A, it's a tough conversation to have. They started as a not-for-profit business model. Today, they are a hybrid, profitable business model. They generate revenue from every farmer that they work with, and they generate revenue from all of the carbon they sequester. They are a profitable for-profit business model today. But 3 years ago, this game couldn't have got played. So we had to find, I'd like to believe smart, the word might be cute, ways to create capitalization to enable this business. So you got to look at family foundations, ultra HNIs, CSR, global foundations like Mulago, the Nilakini Foundation here. We had to look at many interesting ways to get them to product market fit, get them to a business model that is sustainable and scalable. Today we are seeing if we can help them list on the social stock exchange. I happened to be at the NSE day before yesterday. We're trying ways to inject alternative, interesting ways of philanthropic capital at retail scale for a venture of this kind. They're already in 4 states across the country. And there is a great opportunity to create hockey stick scale here. So we are trying very hard to find the relevancy of capital injection for a business model like this, which is tough to slot, so is this a SaaS model? Is this agri-tech? Is this deep tech? You can't slot it well. So it doesn't fit into our conventional ways of, is this revenue multiple? Is this DCF? Is this EBITDA? It's very tough to define it at early stages. We are very comfortable with that ambiguity. And what I want to leave with you, and I'll stop here, is I think as players in private markets, as finance professionals, as people who look at risk capital that can create multiples, there is this, and I don't want to say edge use case, there is this very interesting rainbow of innovation in financing that can significantly help our entrepreneurial ecosystem. I will stop now. Thank you.
So for manufacturing of defense, aerospace, drones, you said there's a lot of scope in that sector. And of course, India does need a lot of that as well. But, a lot of the critical components are still being imported.
Yes, they are.
And what steps are being taken to implement the cluster development like in China? Because there is no, so that's the question from the audience here.
Okay, I'm not an expert at policy, so I'll say stuff because I have opinions on everything. Don't take it as a deep understanding of policy, especially in the avionics space. I'll say this as a 3-part problem, right? The third part is the easier part. Some elements in the defense aerospace areas are what one might call country sensitive, right? So there is strategic importance, areas of defense importance. They are important for the national security and so on. This is the third bucket. In the third bucket, there is some very interesting work getting done. The ecosystem, and that if you remember the slide I showed, especially in the last maybe 12, 18 months, is really coming together. A couple interesting examples. You probably are aware of what ISRO has done with InSpace. So they have spun off a platform that they call InSpace, which essentially says ISRO built its infrastructure, technology, capability over the last 30, 35 years. A large part of that platform should be available for commercial innovation to co-develop, co-create, use as a chassis. And these are areas that can help in agriculture, disaster relief, climate, marine life, a lot of work that happens in infrastructure. A lot of the large infrastructure work today requires satellite technology. And a large part of these are getting commercialized through young fun startups. So there is an interesting way in which some elements of policy are unlocking the knowledge capital that exists across the innovation ecosystem. Similar work is being done by BARC. You wouldn't believe this. This is the Baba Atomic Research Center. They have a technology transfer and a tech incubation capability. We have worked with them in some loose manner. The idea is, of all of the nuclear energy and the patents that have gone into nuclear energy, a significant part of them are not security sensitive. An interesting example, they have created a bio-thin membrane because their test centers is in Trombay and they use seawater for their cooling. They've created a microfilm bio-thin membrane that can filter out saline water to reasonably potable water for cooling. That is available today for any young innovator to pick out and maybe create the next Pureit, Eureka Probes, or you have it, right? So there are interesting ways in which some of this innovation is being unlocked. There are some constraints as well, especially on risk capital. You probably know this, any investor who has a non-India LP on their as part of their contribution is sort of held back from investing in startups that work in certain sectors like defense and so on and so forth. So there are some guardrails, there are some opening up of the clusters. The middle cluster is fairly large, which is large commercial opportunities. I gave a couple examples where scale potential is very high. Indigenization opportunity is very high. Again, I'll throw names. There's a venture called Chara that works in elimination of rare earth materials in all the micromotors that need to go into medium payload drones and UVs and UAVs. Which is a significant indigenization, not just because of security reasons, but massive economic potential. If they can crack their technology and their business model, this is a problem that has global impact and potential. You don't need that dependence on rare earths for at least medium payload drones. And this has nothing to do with China specifically yet. The first bucket is reality. There, especially in certain pockets, EVs, you probably know this, cell chemistry, batteries, and so on. There are certain pockets, propulsion systems, where the cost competitiveness of imported Chinese products is significant to indigenization right now. I wear a pragmatic hat. इसमें कोई खराबी नहीं है. The purpose, and this is random gyan, the purpose of a trade deficit is because you are importing so that you can add value for your innovation and then create larger economic value and larger potential export value. So if any of my startups is bringing in a low cost component and innovating on it to create higher value, let me say short term, medium term, long term, being pragmatic, I have a philosophical belief there is nothing wrong with it. So I look at the world in three buckets.
All right, sure. So I would like the audience also to keep the questions coming. The next question is, we had a very good session in the morning on impact, so I think that's what has led to this question as well. So does your incubator focus on impact while investing? And a following, if it does so, how does it impact your financial outcomes?
Okay, that is easy. We are a not-for-profit. We don't as in, at least until yesterday, quite literally, don't invest in our ventures. We are a not-for-profit in a very true sense. Many incubators have an sweat equity business model. NSRCEL doesn't. So I'll speak about NSRCEL, not because we're special or anything of that kind. It's just the model we have. We are an academic incubator, and it's sort of the belief of NSRCEL that being part of an academic institution, you need to create as limited barriers as possible to be able to incubate any form of innovator. So we try to remove as many barriers as possible, and therefore we don't have a sweat equity model to innovation, to incubation that we do. I'm not saying it is right or wrong. But my lens to impact is not, my lens to incubation is not social impact. We do about 15-20% of our work, which is classical for-profit or not-for-profit social impact entrepreneurship. The balance 80% of the work we do is hopefully creating the next, like I said, Zoho or Freshworks. Little bragging rights, we have 2 unicorns from our portfolio. So we are a classical, incubator that hopes to create significant commercial value through entrepreneurship.
Sure. So you mentioned that the South seems to have a stronger ecosystem, and tier 1 cities
We'll blame it on curd rice.
more talent.
There you go.
So how do you rectify this situation? Because how do you democratize the spread of this?
No, I think it is South not because it is below the Vindhyas. It is because of the per capita of the states. It is natural economic clustering, right? If you look at the 6-7 largest per capita states in the country, you've got Gujarat, you've got Maharashtra, and then you've got Telangana, Tamil Nadu, Karnataka. It is what it is, right? So, and entrepreneurship in a natural manner migrates to large economic clusters because those economic clusters have that ecosystem of corporate, of talent. And why are a lot of tech ventures in Chennai and Bangalore? Because a boatload of IT companies are in tech in Bangalore. Now you can blame that on 1995 and Infosys and TCS, but that's the point of an ecosystem self-serving itself. So I don't want to present it as a flip. I think the reverse is an opportunity, right? Where states don't yet have the kind of economic ecosystem to promote rapid entrepreneurship, what can we do? And again, in my mind, there's nothing wrong with economic migration at all. At least my belief is. Having said that, there are large clusters where migration is not possible or not practical or sometimes just doesn't make sense because the markets and hinterlands sit there. Because of the work we do in some of our northeast states, a large part of the innovation that happens in bamboo, in agar, in rubber is you need the innovator to be there. That innovator can't be sitting in Mumbai. It won't work. Right? The raw material, the supply, the manufacturing, the indigenous capability is in that territory. We've got to find ways to get our ecosystem to get there.
So you also mentioned that the incubation ecosystem comprises of 3 different categories. One is academic, non-profit, and for-profit. Do these different types of incubators suit different types of businesses and entrepreneurs?
Probably might. The corporates are easier for a startup. If a startup has a specific problem set, a use case which can sit well on a corporate chassis. Imagine you're building something in unified communication. Somebody like a Cisco environment might fit your reference architecture very well. And those corporate accelerators will naturally give you momentum. It will give you momentum in technology. It will give you momentum in potentially access to markets and so on. But it may also restrict you. It restricts you to a specific business or technology architecture. That's the nature of that decision you take. Academic accelerators, academic incubators, err on the side of inclusion, err on the side of width. So if you're building innovation, entrepreneurship that can fit multiple scenarios, multiple potential product markets, right? Multiple revenue sources, revenue opportunities, an academic incubator might have a better fit.
Sure. So also, nowadays ethics has become very important, and this being a CFA conference, right? So can you discuss any failures or setbacks NSRCEL would have faced because of ethical dilemmas?
First, this call is not getting recorded and there's no press in the room.
There's no press in the group. I hope nobody is recording this, right? It is being recorded. So, yeah.
So, by the way, Sandeep said nowadays ethics has become important. It's like until day before yesterday, boss chalta hai.
No, it was always important, but nowadays you had large fiascos happening. and large failures that have recently happened in the public domain as well?
It does happen. And it can happen at multiple reasons. And I err on the side of the entrepreneur. Somewhere I always believe that an individual evolves also because of circumstances, and market forces have a role to play in that circumstance. Of course, there is personal ambition and personal mindsets, and I'm sure a lot of behavioral nuances. We do a lot of work in entrepreneurial mindsets simply because of this, that we do believe behavioral nuances have a large game to play in the entrepreneur's longevity, not just the venture longevity, but the entrepreneur's longevity. Can this person play a 15, 20-year game, create a global legacy? Requires a caliber of mindset. Missteps happen. Some missteps are unfortunate. For example, because governance doesn't happen early, we see that with entrepreneurs who are sometimes in a significant hurry. I want to create hyperscale, scale rapidly. And you realize when you're doing your pre-series A, series A, and he comes back and says, yeah, due diligence mein they caught my shareholder agreement, my SHA is not clean. We've had some kind of contracts with people who came into our cap table earlier. Those agreements are very uncharitable to my next investor. I was with a venture yesterday that we are looking to take some position in, and they are pre-revenue and they are already about 55% diluted. And I'd like to believe he's a brilliant company. His technology is rock star, but he's already 55% diluted. तो अभी वो 3 साल बाद क्या करेगा? Unless you go back to your early investors, and this is all I could say, dude, let's go together and say a sad story, because this game won't play out for 3 years. This does happen, which is, there is a degree to governance if in some form we have to be able to, I don't want to say catch early, we've got to be able to find a way to inculcate early. And that can create, like I said, a longevity that could be beautiful.
We're almost out of time, but I would still have time for a couple of more questions from the audience as well. So there is one question that has come that, you had balanced a lot of people in this, farmers for forest. So how do you handle conflicts of interest? Because each of these different kinds of bodies will have different, things that they would need to look out for between mentors, startups, investors.
Okay, I'll not misrepresent. Our job is not an investment banker's job. Our job is not an IB job to, get multiple people on the cap table together to have a meaningful conversation. So I don't want to misrepresent. What we do attempt is create that network, right? If in early stages a family foundation and ultra HNI finds value, in middle growth stages, if there is corporate capital, risk equity that finds value, can we create an environment or a network for the entrepreneur and his partners, his legal partners, his CA partners, to be able to access those networks? Our mentors do, I don't want to say advice, our mentors, they come from industry, they're people like you, do help guide how to navigate this. We're not an IB, so we won't do the structured conflict brokering.
Fair enough. So this is the question directed directly to you. Do CAD-BAKE incubators get grants from the government?
Yes, we do. Okay, we is not NSRCEL. I love saying this sad story. I really hope someone of you becomes a donor to me. So about 14 central government ministries, each of the 22 of the state startup missions in some form financially promote the incubation ecosystem in the country through early seed grants, operating grants, working capital grants, that at least help them in their first 3-4 years of their journey. It does help. Somehow the government believes that we are what they call established business incubators. I don't know why they say that. Hum bhi garib hain. So the government doesn't help us financially. But we do, I'm just showing off now, we do a lot of work with the government in policy, in capacity building, capability building for the ecosystem, which is our role. But I do believe, this is soapbox, the potential investment that in the ecosystem that could make a difference to the ecosystem versus what is currently getting made now, I think the gap is huge. Just as anecdote, you may have seen Atal Innovation 2.0 from the Niti Aayog a couple months back. 5-year landscape for Niti Aayog to invest in the incubation ecosystem and entrepreneurship ecosystem in the country. The capital outlay is 2,750 crores. And I would like to believe that may not materially move the needle of the scale that we're talking about, but it's cool, we'll figure out.
Okay, so we are out of time, but there is a follow-on question by Nitish, which I must ask before we close. So I think he must be from the academic world. How does a college start an incubation center?
Okay, I am not a prof. I'd love it if you call me a prof. All my friends are, unfortunately. I don't know why I said unfortunately. I'm not an academic faculty. I am a professional with the incubator. How does an academic institution start an incubator? I've got a complete consulting division that works on this. So I'll attempt to summarize it in 30 seconds or less. The first is deeply figure purpose. As an academic incubator, what are my strengths? Am I strong on region? Am I strong on tech? Am I strong on cluster? Am I strong in specific? For example, I want to encourage student entrepreneurs. We have a deep expertise in agri-tech, or and so on and so forth, right? That creates the first starting point to the kind of innovation and entrepreneurship I can encourage. The second is governance. It is important for, and this sounds like pontification, it's important for the academic institution to figure why I'm creating an incubator. And I know the NIRF, NAC rankings demand that line item to be ticked. And I do know many academic incubators want to create that tick. Nothing wrong with that. That's what the system demands. You play that game. But if you're genuinely, if the passion is that as an academic institution, we can foster innovation, then that structural commitment is required, which means the chairman of the board of the incubator ideally should be the chairman of the board of the academic institution, which means that commitment thread flows down. And that is very important because sometimes passion can come in waves. And I mean this respectfully. March 1st ko bada entu hai. Up June 1st ko, the realities might be different, right? And that enthusiasm up and down can happen, especially in entrepreneurship ecosystem. Market goes up, market goes down. That is the reality. You have to play the longer game. So that thread is important. Once you crack that, is incubation design. What do I do in incubation? Is my play a real estate play? Is my play a technical play? Is my play a business incubation play? Is my play a corporate innovation play? What is my play defines the design of the incubation. And I think it's if you believe you need to do it, it is a phenomenally fun journey. You should do it.
So great. So thank you so much for
My
you
pleasure.
and your institution for all that you do for the startup ecosystem. Startups at their inception definitely need a lot of guidance. And thank you for being there for us.
My pleasure. Thank you so much for having me.
Thank you so much, Mr. Ganesh, and thank you, Sandeep, for such an insightful session on vital role of incubators in shaping the startup ecosystem. Now I request Sandeep to please present a small token of gratitude to Mr. Ganesh.